Hello and welcome to this week's Market Outlook webinar with me, David Jones, and Ayondo Markets. If you're watching the recorded version of this, it was held live on Wednesday the 18th of October at 12:30 in the afternoon. So this is a webinar we do every week on a Wednesday lunchtime, and it's to look at the major markets, euro, pounds, indices, gold, oil, see what's been going on and what are the big levels to look out for, where the opportunities are, all that sort of stuff. And we also have a session on strategy. And today's little strategy session will be some ideas on where to take profits. So we'll explore that a little bit. There's a lot going on. I think there's some interesting levels to look at for the euro dollar and pound against the dollar. So we'll take a look at those. But I think that risk warning has been up for long enough. So let's just flip over to Ayondo's trading platform. So this is Trade Hub. This is Ayondo's platform. And I thought, oh, why is this doing this? Hold on a second. Let's try that again. So let me bring up the chart. First chart of the day, I think, has to be. Why isn't that working? Oh, let me change it. Hang on a second. Get to a daily. Oh. I'm very used to getting technical problems, just not this early. Let's change it to something else. No? Right, we don't really want to see tiny charts, do we, while we're doing this? Let's just hit click refresh. Okay. There we go, perfect. Right, what market is this anyway? Oh, it's a DAX. Right, let's change this to the Dow. Here we go. So, once again, this is a daily chart, the Dow Jones Index, the Wall Street Index, as it's known by many of the trading platforms. It's hitting fresh all-time highs, even as we speak. So overnight, so the market closed yesterday, 22,993-ish, something like that. So it's up about 80 points overnight. And this trend is relentless in these US stock markets. Absolutely incredible. I tend to look at the S&P. And I was looking at the S&P a little bit earlier today. There's an article that I think I tweeted out on the FT website. It's 325 days since the S&P had a 5% drop from its highs, and that we've got to go back to the 90s to see a market that has done that before. The S&P having done that before, so it just shows the relentlessness of the trend in these US stock markets. And I looked before I came on at a couple of other brokers, and as usual, when markets are doing this, what are people doing? They're short. 75% of clients with a couple of brokers who've got trades open on US stock markets are short, and it's just a trend you can't argue with. From a shorter term point of view, let me just bring up the S&P, because that's the one I may be more familiar with. If you look at this on the actually the dailies is fair enough, but the hourlies maybe gives us a better indication. It's 10 days since the S&P 500 broke the previous day's low. For those of you who've been coming to these webinars for a while, you'll know what a big fan I am for short-term trading of the previous day's high and low. So we've got to go back, I think it's the 8th of October, back here. But then look at the break. You know, it broke for an hour. Actually, that's the wrong one. What am I talking about? It's back here. There we go. That's the break below the previous day's low, but didn't even manage to stay below it for an hour. Just absolute incredible momentum. You know, any dips come in, the buyers come in, and here we go. We've pushed out to fresh all-time highs. So for stock markets, I think we've got to expect them to go higher. You know, it's the anniversary tomorrow, of course, of Black Monday. It's 30 years since the '87 crash. So it would be interesting if history repeated itself 30 years down the line, and we had a bit of a sell-off tomorrow. But at the moment, these markets are just incredibly strong. So I thought it'd be quite appropriate to start with the US stock markets continuing as ever to power higher. But let's look at markets that maybe move around in a few more directions rather than just up. I think euro dollar is an interesting one. Actually, I put a trade in this yesterday, and I'll use that as maybe it's still open, as maybe the example of when to take profits. But I think euro dollar is an interesting market. If we just zoom out a bit, what sort of period do we want? Maybe something slightly longer term, just to remind ourselves where we are on the euro against the dollar. So we spent much of 2015 going sideways. We had a false break in 2016, late 2016 to the downsides. And then the market has just ramped up. So where were we then? Just about 11 months ago, the market was 103, and today it's 117. So it's 14 points higher. So a good 1,400 points higher. So a good 15% higher. And I think it's interesting if we have a look at what's been going on. It's definitely lost some momentum. The euro dollar in the last when did it start running out? Maybe the last sort of 4 weeks or so. But I think what is interesting is this trend. You know, the trend that we've been in looks something like that. Let's just put some squiggly lines on for those who like the squiggly lines at the bottom. Relative strength index. Let's do 10-day RSI. Here we go. There we go. So some people might see that thing there as a head and shoulders. I think if you can see that, and just make sure it's all working. Yeah, maybe a bit of a head and shoulders going on up there. But I think what's interesting, it has sold off. You know, it hit 121 beginning of September. It sold off as low as sort of briefly below 117. So we saw a 400-point drop. But for me, what's interesting is the fact that it hasn't, you know, taken out the old previous support. So you could make the case that this is just, even though the trend line's broke, it's run out of a little bit of momentum here. It's still holding above these major lows. So it's pretty much the same as last week. You know, we have seen it push higher. We'll take a look on the hourlies in a minute. But I think it is interesting down here because there could be an opportunity to be a buyer. Saying that, I went short yesterday, but I don't think there's that much at the moment, not much downside in it. But if we have a look, these are the hourly charts. You know, the market reversed, euro dollar reversed pretty sharply when it dipped below sort of 117 here, back on the 6th of October. So about, what's that, 12 days ago. And we're getting pretty close, well, not pretty close, I suppose we're only 50, 60, well, we're 80 points away from that level. So I think it's a really big one to watch on euro dollar. So personally, I'd expect to see some strength coming in. You could almost make an argument for being a buyer now, I suppose. You could sort of argue as that downtrend started to break. I don't know. We've had the breakthrough today, a breakthrough between 10 and 11 this morning, a breakthrough yesterday's low, but it snapped back really quickly. So you could, if you really wanted to be a buyer, you could make the argument, well, is this just a false break? Be a buyer now wherever it is, 117.50, with a stop under the low of today. And clearly, if it goes back down to today's low at 117.30 and breaks it, it's not a false break. But I think it is interesting down here, and it is more, you know, it is more the bigger picture of what's going on with euro dollar and how well so far the whole sort of 116, 116.60, 117 area has been. So I think it's a really interesting one to watch. It is on the drift at the moment, but let's see what happens, you know, for the rest of today. You know, do we go back down there and it holds? Does it rally from here? But I think for the short-term traders, 117.30 is the big one to watch, and then further out these lows back from the beginning of the month. So I think that's an interesting one, euro dollar. It's a similar thing with pound against the dollar. So let's take a look. And actually, we'll look at one we don't normally look at. We'll look at dollar Swiss in a minute as well. So pound against the dollar. What sort of time period do I want on this? Let's just go with the daily just to remind ourselves where we are in the great scheme of things. So pound against the dollar. You know, we are still very much in this pound recovery thing that we've been in. We could draw it off there, but let's draw it off there this week, which looks maybe something like that. Okay, so the recovery trends that we've been in for all of this year, well, actually since the middle of Jan this year, when we saw that low briefly breached and the market's recovered, we're still in that trend. You know, the market had traded as high as 136.60. It's come off a lot. You know, it's come off 600 points off that high. But again, I think this leaves us a really interesting setup. You know, we saw a pretty brutal sell-off towards the end of September and the first week of October, but 130's held. So like the euro, it's lost ground over recent days, but you know, it's still within the trend. So the argument I would make would be this is just a correction, as is this. and we're going to unwind, and you know, the obvious target would be for a run back up to the 136s. So I think that's an interesting one to watch. If you flick on the hourlies, let's take a look at the hourly charts. Here we go. We do have, you know, if you want to be really short term about this, when it was recovering over the last sort of couple of weeks or so, it sold off pretty sharply back towards 131.20, but then ramped up 200 points over the last few days. We've drifted back. We touched 131.40 this morning, so within 20 points of that level. So I suggest, you know, again, for maybe the shorter term bods, 131.20, a big level to watch RSI. And also, we have the thing we don't see very often, but we have Rsi Divergence down here. So this is what is it now? It's a 10-hour RSI, because I'm on an hourly chart. But Rsi Divergence, bullish divergence, where the market slips to a low, RSI goes oversold, market rallies but slips to a fresh low, but the RSI makes higher lows. So this can be a suggestion that maybe the weakness is running out of steam. So I think you know, some big levels to watch down here: 31.20, 31.40, and the market's currently trading at 131.75. So interesting to see if it's bounce or bust time, I think, for the pound against the US dollar. Just to flip back quickly to our bigger view, I think if it does start to lose 130, you know, clearly we'll be falling out of that trend then. I think the last ditch level for the trend is down there at 127.70. But for now, I think, you know, the immediate one to watch are those lows from about a week ago, not quite a week ago, down at 31.20 on there. Let's see what happens. But plenty to watch on the short and medium and long term, I think, for euro dollar and the other one, pound against the dollar. We'll do the strategy bit next. But first of all, before we do that, let's have a look at dollar Swiss. We don't look at this very often, but I think this is interesting because dollar Swiss, you know, this year has been a really bad year for the US dollar up until recently, and dollar Swiss, I think the dollar against the Swiss franc has been almost a good proxy for that. I think up to the end of August, the dollar had fallen virtually every month of the year. So that the dollar index, if we looked at the dollar index, which is like a weighted basket against a mix of other currencies, and you can see that pretty clearly in our dollar Swiss chart. But I think what's interesting in the dollar against the Swiss franc, and it does go against what I was saying for euro dollar and the pound against the dollar, so I might be hedging my bets a bit here. But if we look at where we were sort of 2016 for dollar Swiss, this whole sort of 94.40 to 95 area, you know, proved to be a real turning point for the dollar against the Swiss franc. It took a long time, you know, from April through to August of last year, but eventually it did turn around and the market rallies, and we've seen a similar thing happening just recently, or well over the last what 3 months or so. So July, we go back to those old lows in July from the year before, rally, come back again, a little bit of a falsy breakout stuff going on, but the market has pushed higher, and we're at levels, you know, back up to levels where we were in May. So I think it's interesting that maybe from the longer term perspective, maybe the dollar has lost enough for the long term. It wouldn't surprise me if we sort of bit of a dollar Swiss sell-off, but the test is going to be, we're going to assume these levels are going to hold and the market's going to swing around again. You know, it's getting pretty overbought on the RSI. It's the most overbought it's been. It's not quite gone into the overbought territory, but this is the most overbought it's been, you know, since we were back here probably. But I think it's interesting. So dollar Swiss, I think, is an interesting one to keep an eye on as a proxy for the US dollar overall. So it doesn't really cancel out my views on euro sterling and euro pound, euro dollar and the pound against the dollar. But I think, you know, longer term, maybe we are seeing the start of a shift in sentiment towards the US dollar. Let's have a little break and talk about strategies. Okay, so we'll talk about when to take profits. There's not a perfect way of taking profits. I think you either fall into the camp where you take profits too quickly, which I think is most people, or like me, you fall into the camp where you take profits too late. Yeah, you'll never nail the extreme of the move. If you're a buyer, you're not going to get out the top. If you're selling short, you're not going to get out the bottom. So what we're trying to do is just strike a bit of a balance, and again have I think a fairly methodical logical approach to it. So what I'll do, I'll show you a trade I've got on at the moment. So it's hedging an options trade. It's on euro dollar, and it's only a little short-term trade, but it's so what's this? This is a 10-minute chart of euro dollar. So euro dollar's been slipping, and the market rallied a bit yesterday. There we go, and I sold at 17.65. Yeah, it's about here. It's about 7 o'clock last night. So I sold at 17.65-ish, and I put my stop loss. I think it was from the highs earlier on in the day. So the highs earlier on for yesterday were about 1800. So my stop is at 1810. Arguably, a better stop would be up above 1820. But as I'm short from, let's call it 1760 to make the maths easy for me, and a stop at 1810. So let me just scribble that down, and I'll go through the rationale for how I think I should take profits on this. Let me just flip my screen over and bring up my scribbly paper, and then we'll do it. So for me, so the trades, so I'm short from 117.60 with a stop at 1810. So my stop is 50 points away. Yeah, near enough, isn't it? 50 points. So for me, I'm not actually allowed to move my stop. So the market's sort of started falling, but I'm not allowed to start trailing my stop until it's moved at least 50 points in my favor. So for me, the market's got to get down to 1710 for me to move the stop. And I think the lowest we've been today, I think it's been as low as 1730. So 117.30 I think is the low for the euro today. So at the extreme for the trade, I've been 30 points in profit, but I'm risking 50 points on the trade in the first place, you know, so it's stupid to snatch a, you know, I don't know, a 10, 15, 20 point profit if I'm risking 50 points in the first place. So rule number one for me of when to take profits is the market has to move, at the very least, the distance my stop was away when I put the trade on. So if the market this afternoon falls to 1710, for example, so at 1710, I'm 50 points in profit. I haven't drawn this to scale, so I'll be 50 points in profit at 1710. So that's the same as my initial risk. At that point, I would move my stop to break even. So I've moved my stop to 1760. And then I think, I mean, there are a couple of ways of doing it from then if you're in a trade from then. Let's just clean that screen up. You know, if you're in a trade and the market, you know, has moved in your favor, let's say you're short and you're, let me stick with this example. So 117.60. The market's moved to 117.10, so I've moved my stop. Stop is now break even. I think there's a couple of ways of handling it. I think you either have a target in mind, so you might think, okay, the euro is going to go to, I don't know, 116.80. 116.80, there you go. So you have a target in mind. So one way, well, actually there are a couple of ways here, aren't there? You can have an order in to take profits at 116.80 and just leave your stop at 118.10, for example, or you can move your stop to break even and still have your order in at 116.80. Or what I tend to do, and again, I don't think there's any right or wrong way of doing this, is just use a trailing stop. So you can either use, you know, an automatic trailing stop that gets trailed in your favor as the market moves, or a manual stop, you know, based on alerts. If the market gets to a certain level, you might move your stop. So for example, you might think, okay, the market's at 117.60. Sorry, I sold at 117.60. The market's currently at 117.10. My stop is at break even. If the market moves another, for example, 20 points lower, I'm going to have my stop dragged down 20 points. So I'm going to move it to 117.40. So what happens is if the market does sell off, then comes back, you're still out at a profit. But of course, if the market carries on falling, then your stop is just getting trailed and trailed behind it. And if the market absolutely falls off a cliff, you're still in the trade. It's not perfect, but for me, in recent months, and definitely on longer term trades on things like equities, the trailing stop works really well. I've got a couple of trades still going. I think Lockheed Martin is one, and Verizon, I think, is the other. So 2 US stocks that I opened up in September last year. So they've been running for over a year, and I've just trailed a stop up. I think it's something like a 10% stop. behind the most recent high. So for me, it's not perfect because along the way, you'll end up giving up profits if you're trailing a stop loss. You know, if the market is going up like that and you're trailing a stop, then the market, you know, you're going to give up profits. But for me, it does avoid maybe getting out here because I think that's the high, and then missing out a whole chunk of the move. And something else, you know, the S&P is a great example. It's been 325 days since the S&P dropped 5%. So if you'd have bought the S&P, it's always, you know, it's great with hindsight, isn't it? But if you'd have bought the S&P in December last year, and you had a 10% trailing stop loss, you'll still be in the position. So for me, trading stop losses, the downside is you end up giving that profit. The upside is if you get an absolutely stupid move, you're still in the trade. Like I say, there's no right or wrong way, and you may be of the mind where if you see a market that's doing that and has done that before, you want to be a buyer here and you have a hard target to take profits up there. It's again perfectly sensible way of doing it. So I think that's one way of doing it. The other way, if you think there's going to be a trend going on, is to trade a stop loss. So that's it. I think there's a couple of hopefully relatively simple ideas there for when it comes to different ways we can think about when to take profits and just sort of find out what works best for you. Let's go back to the markets. So where is this market now? Oh, it's nearly back. It's nearly back to where I sold it anyway. Let's see. So my stop is still up here somewhere. So if the market rallies from here, I'll be stopped down. But if it needs to get to 1710 for me to move my stop to break even. Let's have a quick look at stock markets. I mean, for US stock markets, what do you say? You know, I could just say whatever I've been saying for the last few weeks or the last few months even. Yeah, it's a market. It has been an incredibly strong trend. You know, since it took off, since we broke out again. It's only a month ago when the market was below 2,500, and it's only what 2% higher, I suppose, isn't it? 50 points higher, 60 points higher. Yeah, 2.5% higher. But 2.5% in a month, you know, it's still a chunky old move, I think, for an index. So it's just buy the dips, isn't it, when it comes to US stock markets? And these dips, yesterday there was a dip, but as usual, you know, it doesn't last very long, and the market just goes and actually ramps higher, and off it goes again. You know, we're off to the races again. So I think for the S&P 500, you know, and the Dow, you know, any weakness still looks like a buying opportunity. I do think if we did get a sizable sell-off, it could end up being quite a panic move. And tomorrow is the 30th anniversary, of course, of Black Monday, October '87, when we had the markets crash. So let's see. But I think if we did have, you know, a half decent sell-off, then I think it could spook a lot of people into really selling because they've got so used to markets that just go up. You know, you buy it and, you know, within a couple of weeks you're well rewarded for it. So I think the big levels to watch on the S&P, I mean, it's this low back here, 2540, and then all these various little fiddly levels left on the way up. But let's not lose track of the bigger picture. You know, we keep going back to the election, the US election last year. If we take it off that level there, you know, there's our S&P trend, you know, coming in at 2480-ish, you know, which is 80 points below where we are now. So they keep going up, keep buying the dips. If we have a look at the FTSE, what's the FTSE? I've not looked at this. This is interesting, the FTSE. We were looking at this last week, weren't we? Because the market has come back to these all-time highs. So, yeah, if you really thought stock markets were going to crumble, this is the place to go short the FTSE. So all-time highs, let's round it up, 7,600 from June this year. That is the all-time high, isn't it? I'm not making it up. Yeah, that is the all-time high. And here we are. We are now 7540-ish, and we've gone pretty sideways over the last week. So if you really thought the market was going to go down, you'd be a seller with a stop above and wait for the crash. If the market breaks 7,600, once again we've got a breakout and pick a number out of the air. 8,000 will be the next target for the FTSE. But I think 7,600 is an obvious one to watch. But if these US stock markets keep going up, it is difficult to make the argument that the FTSE is going to go down. You know, you'd expect the rising tide lifts all boats, doesn't it? So you'd expect the FTSE to get dragged higher as well. There is an awful lot of quite bearish comment out there, people writing about how the market is overextended, blah, blah, blah. And it is, you know, it's just, to not have even dropped 5% for nearly a year is ridiculous, but it keeps going up. Let's see. DAX, let's look at the DAX, still German market. So here we go, new highs today, by the looks of it, new highs today. So we had, the DAX had a bit of a torrid time during the summer, sold off pretty heavily, dropped 1,000 points, that's a decent correction. When other markets are moving higher during the summer, then just this month, beginning of the month, we had a breakout through the old highs, through 12,950-ish, and we're here, we're 13,050-ish now. So getting, not surprisingly, getting dragged higher by what's going on in US stock markets. So DAX still very strong and just following really what the S&P is doing, whereas the FTSE is having a bit of a pause. Let's take a look at the two others. Let's take a look at, if we do gold or oil first, let's look at gold first. Let's take a look at gold. So gold is, I think gold is an interesting one anyway. I think a few times we've looked at the bigger picture on gold, and I think gold's interesting because of what's gone on over the last few years from September 13. So we saw the price of gold peak September 2011, peaked up about $1,920 an ounce, and then it just spent almost every year just going down. You know, lost money every year, dropped back, almost halved, I suppose, not quite halved, but dropped back, you know, 45% or something. But I think what was interesting was what we saw in 2016, where we saw the market sort of break out of, I suppose, the trend that had been in place after the market sold off sharply. We had this gradual trend from April 13 through to Feb 2016, so this 3-year trend, and the price of gold actually managed to break out. Then last year, in June last year, it got as high as 1375, sold off, but again, you know, from a bigger picture point of view, because we're not breaking any major previous levels, i.e. the lows from late 2015, you know, the recovery was still intact. You know, this year it's had another look up here, up at these highs, but for me, you know, I would suggest that the trend that's been in place since December of last year, let's change the scale, let's go to a daily chart. The trend that's been in place since December last year is still, I think, just about going. You know, it looks, actually it's better than just about going, it looks like that. So there we go. So it pushed us high up to here, 1350. We've come off. So it's a little bit like the pound chart, I think, where we've sold off and we've bounced. And again, it's a bit of a, clearly it's a bit of a play on the US dollar. You know, if the US dollar's going up, the price of gold goes down, and vice versa. But I think, you know, it's still weak. We've sold off the last 3 days, but some really big levels to watch. You know, these the 1260 low from just the other week. After that, 1250. After that, 1240, 4-ish. And I think it's only if we lose these old lows at 1200 does it start to look as if this 12-month recovery story in gold is coming to an end. So for me, I'm expecting it to snap back, is what I'm trying to say in one sentence. And I think the first level I'll be watching, how does it perform if it slips down to the 1260s. But for me, I think I'd expect it to go up $100 rather than drop $100. Famous last words. Let's see what happens. And finally, US crude oil. I've not looked at this for a bit, but since the last webinar actually. But the story is still the same. You know, on crude, I was surprised by how weak it was this year. I had a really strong finish last year after getting clobbered down to $26 in February of 2016, and by the end of the year, it was up above 55. But it spent much of this year in reverse. You know, we've it's done that. We just slid. That's not a very well drawn line, but you get the picture. It's just slid lower and lower. But I think that the moves that we've seen, or the rally that we've seen since June, has turned this round. You know, if we plonk up a little trend on since June, the market looks, like that. That trend is still chugging away. The sell-off the other week down towards the 49 area was a buying opportunity. If we got weakness again from 52, where we are now, back to 49, looks like another buying opportunity. If we look on the hourlies, I think oil, there we go. We do get some really big moves. I think you do need. I think if you're going to trade it, you do need to trade it with reasonably, wide stops. Because if we just look at just yesterday, is it yesterday the 17th? Yeah. Yesterday it in the space of 3 hours, it travelled through, you know, a good 100-point range. Yeah, actually in a couple of hours, you know, so I think you do need to give it a bit of room to move around. But if we go back to the dailies, you know, I think that trend, if I could click on the right thing, that trend is still going strong. You know, we've cleared the old highs from back here. We had a look through the old highs. If we get another push through 53, you know, I think we can again start targeting the old highs from end of last year, beginning of this, you know, up sort of 55, 56. But at the moment, at least, any weakness in the price of oil seems to bring the buyers back out. And I think it's only if we lose the 49 level that it looks like this trend is over. So we'll start wrapping things up there. So I think the immediate thing for me, it is the currencies. Should we mention Bitcoin? Let's mention Bitcoin. Well, before we go, so Bitcoin again. Bitcoin is doomed now because I actually got around to buying it about 2 weeks ago. So it's going to fall off a cliff now. This trend's going to end. But we did have a breakout on Bitcoin. The highs in the summer. So it hit 49.20-ish in the summer. Then it got clobbered on the Chinese exchanges closing. So it dropped to 3,000. I mean, it's an absolute lunatic market. You know, to go from nearly 5,000 down to 3,000 in less than a month is a crazy market. But it broke out again. You know, it's broken out. There's the big move, the big candle. So it's broken out. It's traded as high as nearly 6,000, not quite. But you know, the rise of the cryptocurrency goes on. I think it's always an interesting one to look at. But an incredibly volatile market to trade. So I'm not remortgaged my house and put a bet on that one. But I think the interesting ones to watch: euro dollar. As our euro dollar chart, because of these old levels, 116 through to 117, and let's see what happens. But I'd be expecting, so far at least, because we are seeing these levels hold down here, maybe something of a recovery. And pound against the dollar, you know, because it's been a little bit all over the place over the last few weeks, but it seems to have finally broken the back of that slide over the last week and a half or so. 130, 120 is the immediate one, and after that the big one just coming in ahead of 130. So I think there are some really big levels, and of course US stock markets are just going to go up forever. You know, we'll be back here this time next week, and the Dow will be up another 0.5%, I'm sure. But watch out for tomorrow, for the anniversary of Black Monday. Let's see how that goes. So we'll start wrapping things up there. Any questions after this, drop me an email, david@tradeafter.com. I blogged a bit, and I need to update it. I always say I'm going to update it, but I never get around to it. I blogged a bit about social trading with ayondo on my website, which is tradeafter.com, so you can read that there. Someone's just said Buffett has got a 1 million target for the Dow within 100 years. Oh, well, I won't be around to cover that, but let's see what happens. I'm going to wrap things up. So that's it. Thanks for coming along. We'll do it all again, same time next week, and we'll see where we are. Okay, I'll let you get on with the afternoons now.